Okay, welcome back. I'd like to talk a little bit about some examples from our textbook to supplement our discussion on the 1040EZ form. In this first example, Elizabeth Allison is a food editor for a magazine. That's her primary job. And she's received a W-2. So remember, a W-2 is the form that you see below here that her employer has put together and sent to her. And on this form, we see how much money she was paid in wages. So if we add up all of her paychecks, it adds up to $83,600. And this form also shows how much money has been withheld or taken out of her paycheck for taxes. So when we add up all of those paychecks together, income and withholdings for federal taxes are shown here. In addition to earning money at her job, she does have some investments with a bank, and the bank has sent her what's called a 1099 form. And a 1099 form is similar to a W-2 in that it does show us income. But remember, Elizabeth didn't go to a job to earn this. She had invested money that was earning an interest amount. So even though she didn't actually earn this by completing a job, this is included as earned income. She has to pay taxes on it. You'll notice that on this form, there's nothing reported or nothing recorded here in box number 4 that's talking about the income tax that's been withheld. So in other words, she's earned $956 on this investment, but she hasn't paid any taxes on it yet. And so that's what she has to do with her 1040 form. Now, the question that we're trying to answer here is, what is Elizabeth's taxable income for the year if she files as a single taxpayer? Well, to be honest, it doesn't really matter if she's filing as a single taxpayer or if she's married. She would include her spouse's income should she choose to file jointly. But again, as a single person or not, she has to add up all of the money that she's earned from wages and from income in the investment. So in this case, her taxable income, well, that's the $83,600 that she earned at her job, plus the $956 that she earned from her investments at the bank. And that looks like it's going to come out to $84,556. So if she doesn't have any other deductions or ways to reduce this earned income amount, she'll have to pay tax on $84,000 earned last year. So that's example 1. The first thing that we need to do is find out how much we've earned so that we can determine how much taxes that we owe based on the money that we earned. With our progressive tax system here in the United States, you don't pay taxes the same when you make $80,000 as you would if you made $280,000. So when we report this information on the 1040EZ form, as we have here, the first thing we've got to do is list the $83,000 that was earned from her wages, salaries, and tips. So that's what she earned at her job. And then there's a place for the taxable interest, how much money she earned as a tax investment. And the instructions on the line, since she has no unemployment compensation, she didn't make any money for being unemployed last year. When we add together lines 1, 2, and 3, this confirms our suspicion from a moment ago. Then she has an adjusted gross income of $84,556. Now this is where it gets a bit interesting. Yes, she earned $84,000 last year, and many would think that she needs to pay taxes on $84,000. But if you keep reading the instructions here, line 5 asks if someone can claim you, or a spouse if you're filing a joint return, as a dependent. If someone can claim you as a dependent, then you would check the applicable boxes below and enter the number or the amount from the worksheet on the back of this form. Now, if you're a dependent, that means you are depending on somebody else to financially care for you and provide for you. In Elizabeth's case, she's making $84,000 a year. I don't think she's living at home. She's not a dependent of her parents or an aunt or an uncle or a grandparent anymore. She is solo and on her own. So in this particular form, since no one can claim her, she is not going to check this box. She's single, so she wouldn't check the spouse box anyway. So she's not going to check this box. And if we continue to read on, we see that this statement definitely applies to her. No one can claim you, so she will enter $8,950. This is what's known as a standard deduction. Back to this comment about her income from a moment ago. Yes, she did earn $84,555 last year, $556 last year. But because the federal government has in place the ability to reduce or deduct from your income, then we will subtract this number, as the instructions say in line 6. And when we do, we get the result of $75,606. The number that's shown here in this box at the bottom, this is how much she'll pay taxes on. And that's a nice thing to see because it's smaller than how much she actually earned. But when we calculate taxes, it's based on this number, not this one up here. What I'd like for you to do right now, though, is think about this question here. And I'm not going to put a solution in this video. I want you to think about it, or maybe talk with some folks in class about this too. How would Elizabeth's tax form differ if she were married filing a joint return? So in other words, if she had a spouse and had no income to report, so she was married, but the spouse doesn't have any income, well, that's not going to change the wages or investment income, but it might change some other numbers that are on this form. So consider that. What would be different, and how would this form look, lines 1 through 6, if she was married filing a joint tax return? If you didn't pause the video, go ahead and do so now and jot down some thoughts or discuss what your answer would be for this question, and then resume playback in just a moment to continue with this video. Okay, so to keep moving forward now, since we know what her taxable income is, let's go ahead and figure out how much tax she actually owes. Now, the nice thing about doing your taxes is that you don't have to use a calculator all that much, maybe for addition and subtraction, but not so much more than that. So line number 7 in the instructions says to report the amount of tax that's been withheld from box 2 of your W-2 form. And so if you've got these laying out on your desk, you would jump back to your W-2 form. Here it is, and look at box number 2, and we're going to write that number down on the tax form. Okay, so $15,884.00. Now, the nice thing also about these tax forms is that if a particular line item doesn't apply to you, or if you don't want to try to take advantage of a credit or an allowance, then you don't have to complete that. In this case, we're going to go ahead and skip this earned income credit. Only a few people qualify for it, and it's very hard to do. So we will research that later, but for right now, I'm going to tell you that Elizabeth does not qualify for the earned income credit. Additionally, she does not qualify for this non-taxable combat pay. Think about those of those American citizens that are receiving combat pay. Well, it's not a food editor for a magazine like Elizabeth is, so she does not, or she is not entitled to this election. Lastly, the recovery rebate credit. I'm personally not that familiar with it. If I wanted to look it up, I would go to page 17 and 18 in our instruction booklet and do some more research. But as far as I'm concerned, Elizabeth is not entitled to that either. Now, if she was, then we could go back and do the work and change this number and hopefully reduce our taxes. But if she chooses not to do that research and complete that portion, she won't be penalized for it either. So moving on from here, the instructions tell us to add these lines together, which is very easy to do because of all the zeros that we've got. And now we'll use the tax table that's available to us in our textbook to compute how much she owes in taxes. Well, since her taxable income was somewhere in between $75,600 and $75,650, and she is a single person filing her taxes, then this booklet is telling us that she owes $15,250 in taxes. Before you get too concerned about that, pay close attention here. She's already paid $15,884 in taxes. She's already paid this much. That's how much has been taken out of her paycheck throughout the year. And according to this form, the government should have only taken $15,250. So the question becomes, and we'll come back to this check your understanding in a second, does Elizabeth get a refund or does she continue to owe the government more money? So I want you to think about that and provide an answer to this worksheet on your own. And then also go back to this check your understanding and again consider what would happen in this form if she was married filing jointly, if she was married and filing a joint return. The amount of tax that a couple would owe if together they earned the same amount of money would have only been $11,595. So with that in mind, consider this question too for the check your understanding. So go ahead and answer these two and make sure that you go back and provide a response to this check your understanding question. And if you have further questions, feel free to ask one another or the substitute that's in class today. Good luck.